The following is a presentation of TFNN. It is now time for the Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 29th marvelous Monday edition of today's opening bell. Of course, today's opening bell isn't really going to open out here, but it is still today's opening bell on the Trader's Edge, folks. Thanks so much for joining me. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that you need to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So for all you folks that are listening in that are in harm's way out there, which is covers a large swath of territory up along the eastern seaboard of the United States, thanks so much for listening in. Be careful out there. You know, for all of the rest of the folks that are listening around the world, pretty rough storms hitting the northeastern part of the United States here. Not a direct hit yet. Will be a direct hit sometime late this evening, I presume, or early in the morning hours. As a result of that, we've got the U.S. markets that are actually closed today. You've got the futures market open for another 7 minutes out here. So the overnight session was open, but everything being buttoned up today. It may be the case as well for tomorrow, also. And what I can tell you is that along the West Coast, where I'm coming from, west coast of Florida in Clearwater, everything is just peachy keen, no problems out there. But along the eastern seaboard in Florida, and the eastern seaboard really wasn't hit. There was no direct hit on that storm, but the beaches absolutely got crushed. The waves, even with the storm, last night being as far away from Florida as it was, there were still 15, 20-foot waves, which is pretty unusual. This is not the North Shore of Hawaii out here, so the beaches along the eastern seaboard in many places just absolutely getting crushed here over the last couple days. Now we're talking major beach erosion, not just a little bit. So I can only imagine what that portends to the eastern seaboard of the United States. But thanks so much for joining us. We've got plenty to take a look at here today. Our call-in number is always 877-927-6648. And let's go take a look at one of our tools that help us lead an inspired life, folks. I love this tool. This tool is called We Can Become Bitter or Better as a result of our experiences. I know that each of you want to become better, but if we take a look at two identical twins that were attending a high school reunion, their 20th high school reunion. Well, that seems kind of young. A 20th high school reunion. One brother was very successful. He's a successful writer. The other brother just simply failed miserably at everything that he did in life. Now, the successful brother was asked what he perceived as the critical factor that helped him to achieve his different successes in life. And he quickly was able to say, it was a result of my parents. Now, that is a beautiful thing to hear. However, the other brother was actually asked the same question, maybe in a little bit different way. But what the other brother was doing is he blamed all of his misfortunes on his parents out there. So you had one brother, what he learned, he was prepared to move ahead and explore his experiences, while the other brother was willing to do what? Wallow in his negativity out there. Now, that reminds me of another story out here. And so it is Story Mondays. And this story goes back to 1848 out there. And if we go back to 1848, this was a time during an Irish uprising in which those captured were tried and convicted for treason against Her Majesty, the Queen Victoria. And all were sentenced to death. Now, this created a lot of upheaval and passionate protests from around the world. And finally, the Queen was persuaded to commute the sentences. Now, this is a true story. The men were banished to Australia. This is back in the 1840s. Now, back then, in that time, being banished to Australia was, I guess, similar to what you might say being, as we use as a metaphor, being banished to Siberia, Russian Siberia. So it was a kind of a similar experience, I suppose, or the way that folks looked at it back in the 1840s. Now, in 1874, the Queen learned that Sir Charles Duffy, who had been elected the Prime Minister of Australia, was the same Charles Duffy that had been banished some 26 years earlier. Something to think about. Something to think about, folks. She asked what had become of the other convicts. And what she learned was that guys like Patrick Donahue, he became Brigadier General in the U.S. Army. Morris Lane became Attorney General of Australia. Thomas McGee, he became the Minister of Agriculture for Canada. I'm just trying to touch the whole breadth out there. You had Terrence Meagher. Terrence Meagher, he was elected as the governor of Montana. And it goes on and on and on. You see, folks, life will take twists and turns just like today. Just like today with the markets being closed here in the United States. Just like with a hurricane and a perfect storm with a cold weather front. Life will take twists and turns. That much I can absolutely assure you. It works that way in the stock market as well. Life can sometimes throw us off course, folks. However, the longer we live, the more opportunity that each of us have to right the ship, so to speak. So your living, folks, it's determined not so much by what life brings to you, because life is going to bring it on. It's not determined by what life brings to you as much as it is your attitude that you bring to life out there. So not so much by what happens to you, as by the way that your mind looks at what happens out there. Circumstances and situations, folks, they do color life. But you've been given your mind to choose what color it is that you're going to paint your palette with. We can become bitter or better out there as a result of our experiences. Remember, what happens to us, folks, on the journey of life, it's not nearly as important as how we handle what happens out there. So let's go take a look at these markets. Let's take a look at the journey of life in these markets. We're taking a look at the futures right now. Again, trading for another 2 minutes out here. We happen to have the ES Mini up right now. That is trading down about 7 points out at 1,400.75. If you're listening in on the radio, maybe you're just new. You just happen to be flipping through the stations. You're listening to us here at TFNN. You can always catch an archive of this show on TigerTV. All you have to do is go to the homepage at TFNN.com. Up in the upper section, you'll see a button that says Tiger TV. You can watch this show live. This is actually archived on Channel 9. So maybe you want to take an active role in managing your money in the markets, and you'd like to understand what type of technical trading. I think there's nothing more fundamental than understanding what the traders are actually doing in the markets. We're taking a look at candlestick charting. That's what you're looking at if you're watching my screen out here. And you can always give us a call, 877-927-6648. The markets may be closed, but not here at TFNN. Today's lineup, we've got this show here. This is going to be replayed here from the 10 to 11 hour. Then we've got Basil Chapman from 11 to 12. Daryl Martin will be in from 1 to 2. We've got Ken Shreve 3 to 4. Tom will be live from 4 to 6. So the storm is not going to keep us down. But if you are in the path of that storm, it is serious out there. It is absolutely serious. So make sure that you are prepared. So if we take a look at the ES Mini out here, that's what we're doing right now. Let me just refresh my screen. We're looking at the ES Mini 30-minute chart. So let's go take a look at what it is doing out here. Let me just refresh my screen, make sure we've got all the proper bars out here, and we do. So the ES Mini here made a low coming in at the 1:30 in the morning time frame on October the 26th. That was on Friday. That low out there, 1394.50. What you can see here is looks like the ES Mini did what it should do, which was an A to B equals CD down on a shorter term time frame. Did it on the way up. Let's go take a look at it on the way down. And the markets, folks, what they do is they breathe. They make these patterns, lightning bolt patterns. We call them A to B equals CD. We're just simply using the alphabet that we learned. And if we take a look at the A point here, it's really where you see a swing point. A swing point is nothing more than a change in trend in the marketplace. That swing point here, we can see that the market was moving up right in the time frame of 4 p.m. on the 26th, and then the market went ahead and pulled back. That is our A point, the high of that candle. That makes it 1412.50. Your B point, that's where you see another change in the marketplace. That's the low at 7:30 last night. That's when the ES Mini got down to 1401.25. What's it do? Takes a couple hours, kind of retraces back up to the highs there. Well, I wouldn't say the highs, but it made a high of 1406.24. 1406.25. And 1 to 1 A to B equals CD would have taken it to 1395. Has not gotten all the way down there. Only got down to 1397. Of course, what it was running into was right here. It was running into this little candle right here, which is a hammer candle. Now, that hammer candle, that goes back to 1230 on October the 26th. So let's go take a look at, I'm going to draw a line along the bottom here. And what's important about a hammer candle is that if the market does not close below it, it can certainly test that area, and it did coming into the 7:30 session here this morning when it got down. It closed out at 1397.50. The low of that hammer candle is 1397.50. Didn't get below it. That area held. This is an area here where the bulls in the market, we talk about bulls and bears. Bears just simply meaning that price is moving down. Bulls meaning that price is moving up. Well, if we take a look at the bears in the marketplace, they pushed price all the way down to the last time when we take a look at this chart here where we can see the bulls really stepped in, and they just like they were building a little barrier, on the beach out there. That's the beachhead barrier inside the ES Mini on the 30-minute chart, and the bulls were able to step in, defend their position out there, and now coming into the close here, it did close 1402.75. That's going to be the close on the futures. Let's go take a look at the daily chart, see what the daily chart gives us, because that's a larger picture out there. As we take a look at the ES Mini, I'll punch this up here on the screen. What we can see, ever since the real down thrust, the body, folks, the body of a candle is really the true essence of price. Not that there's not meaning behind these wicks here or these long shadows or upper shadows, lower shadows, however you want to take a look at it. But really, when you take a look at price, it really is the entire body of that candle that is out there. So we can see the last time that we had any real large down thrust came in on October 23rd. The low of that candle happened to be 1402. If you take a look at the low of that candle, you close at 1402.75. Now, that candle, it's not a bullish candle, that is for sure. The bears absolutely were in charge. But if we take a look at the next couple of candles out here, what you can see is you got these small real bodies. Well, if the body is really the essence of price out there, and you take a look at these small real bodies, after this little down thrust here, after a little bit of a relay race, what would you say is happening here in the markets? Doesn't matter whether it's a shortened trading session, because the last 3 trading sessions were anything but shortened out there. So what happened? What if you're taking a look at this? If you're just trying to understand maybe candlestick charting, or technically, because this is really nothing more than understanding the psychology of the marketplace. And when you can understand the psychology of the marketplace, what it will do, folks, it will give you a one-up in helping you to be able to step back, take a look at what is going on out here. And what we certainly can see with regard to the psychology of the marketplace, there's a little bit of a trend change that may be going on. There's a little bit of tiredness inside the market. Take a look at this candle here, certainly on the 24th here. Even though a small little body out there, a little spinning top perhaps, if we take a look, maybe a high wave candle out here, as we take a look at it, still the bears were really in control there because you have more of an upper shadow than a lower shadow. But what you can see here, the market is losing its way to the downside. All that makes sense, folks. It happens to be Full Moon Monday. And on Full Moon Mondays, doesn't have to be Monday, just simply on full moon days, we typically see a change in trend in the marketplace. That's what those candles are also telling us. That was before today's full moon. 877-927-6648. We get back, we're going up to New Jersey to Tom to take a look at JCI. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go to our first caller. Let's go to Tom in Paramus, New Jersey. Tom, thanks for calling. Thanks for holding. How are you today?
Good, good. I just wanted to let you know before we talk about JCI, their earnings come out tomorrow, and they're buying N1, the battery technology.
Oh, okay, great. Okay.
But if you go to his website, American Kabuki, they'll show you we had a Hurricane Sandy, a simulation in 1997.
Yes.
And you heard of HAARP. They can make clouds and make these storms. This is a man-made storm. It's done because of the elections, or I guess to get the GDP up. This is all. This isn't a real storm, because if you go to the website, you'll see a whole thing showing you how all these clouds are made. And a guy named William Tesla developed the whole thing on how to do it.
Yeah, well, you know, if that, look, that's...
We got the best money government can buy.
Well, that we do have, as far
and
as...
that's the only thing we can do is make storms. We don't do nothing else.
Yeah.
We'll get the GDP up and some people back to work.
Well, let's
thing for elections.
Tom, I'm happy to look at Johnson Controls for you if you'd like. Is that what you'd like me to do?
Yeah, I like to do that. I'm just saying it's coincidental.
Tell me what you're doing here with Johnson. JCI folks, that's Johnson Controls. Tell me what you're doing here.
Chart shows it going back to 13. I don't know if that's possible. At 13, I think it's a great buy. If they get this technology for free.
Yeah.
So N1 went out of business, and GE was a major stakeholder.
Yeah.
I'm thinking it's a whole new battery technology, so they'll have the whole,
Yeah, well, what it does look like to me here is Johnson Controls closed out on Friday, folks, at $25.81. And if I put this on the weekly for you here, what it looks like to me is this wants to go back and at least test the week of July 27th. Now, the high there is $25.24, so it's not that far away. The low is $23.37. It's a high volume week, the same as the prior week, did 47 million shares. And last week, as it was coming down, came down with 24 million shares. So this actually is looking like it's really in a fairly tight little consolidation here. Now, the trend is absolutely down. I would say that this will release some information to you, Tom, as it tests the low of 23.37. If you get a close below 23.37 on more than 47 million shares, this will go ahead and run lower. But right now, it doesn't have the energy out there, it seems, to do that.
It's almost into where it was in 2009, right before it crashed.
Well, okay, yeah. But instead of having to go back to 2009, all I really have to do is take a look at where it's trading right now, and where it's trading. Go ahead. And where it's trading right now really is what you should be taking a look at is, and it is trading in 2009. And what you should be taking a look at is the July 24th area of 2009. It's a little gap up there that hasn't been tested. And until that gets tested, and likely it will be, and likely that window will be fixed and closed, that's where it's headed to.
Again? What's that number?
Yeah, well, the bottom of that number is 22.11. The top of that gap is actually at 21.57. And that is most likely where it would head to. But right now, it does not have the volume to get down there. And so...
Can I have one more PEG, PEG? You told me to wait on it. I've been waiting really patient and had 3 big drops in a row. I don't know if that's a special candle setting.
PEG. So if we take a look, PEG is the ticker symbol.
And we're getting beat up with the storm, so I don't know if that hurts earnings or what.
I don't think it has anything to do with past earnings, that's for sure. So, but let's take...
The earnings come out on Wednesday, just so you know.
Yeah. Well, the earnings, whether they, that again, if we just take a look at what the traders are telling us here right now, you've got PEG, which is Public Service Enterprise, and this thing here, again, it's really been in a consolidation range. That consolidation, if you're looking for a place to enter on this, it's going to be down at the May 25th area, right in around the $30 range. That had 12 million shares. That area has not been tested. It's high volume down there. That's with the gap that you're taking a look at here that occurred on October 22nd and the close on Friday at the low of its session. That's telling you where it wants to go to. Now, it's first got to get through
31.66.
Yeah, 31 1/4. Yeah, that's September 5th.
You think it's going to flow through there? You think it will go through there?
It should. Yeah, it should. It should go down, and it should test the May 25th level.
Where the volume is, those 2 big days or something?
Absolutely, yeah. I mean, that's really what you should be waiting for.
Then, huh?
You should be patient. I would be patient out here with this equity. All right, my friend? Look, stay safe out there, okay? This is a very nasty storm, no matter how it came into being. Be safe out there.
It's political, man. Remember Obama did it.
All right. Take care.
Bye.
All right, folks, as we go into a break here, no opening bell when we come back from the next break here, but you can always give us a call at 877-927-6648. We come back, we'll go take a look at the currency marketplace. We'll go take a look at what's going on over in Europe. You have the DAX down 33 points right now, the FTSE off 18. Asia was all red last night. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, and as we take a tour around the world here, we got the DAX up on my screen here. The DAX in Germany trading out at 71.9538. That's off 36 points from the close. Now, as we're looking at the chart pattern that's out here, so the U.S. markets are closed today, and they likely will be closed tomorrow. I can't anticipate a situation where they're going to be open tomorrow. The storm is not supposed to really hit the coastline of the Northeast until, I think, late tonight or early in the morning. And that being said, and I think that storm is going to be around here for a while, wreaking havoc all over the northern, Midwest, eastern part of the continental United States out there. And so I imagine that the markets will be closed tomorrow as well. So that means that what we have to do is we have to look for clues elsewhere in the marketplace as to what the markets here are going to do. Now, today at 3:51 p.m. is when the actual full moon occurs here in the United States. And typically with the market moving down, you would expect futures to be moving down into it. It's where we should see a change in trend. So we're going to be able to now just sit back and watch to see how things play out here. And we'll certainly take a look at, and one of the clues that we can look at certainly is the DAX. Now, the DAX in Germany used to be one of the weakest indexes out there. It is not the case just right at the present time. And the DAX here gives us something really good to key off of with regard to price movement here in the marketplace. Now, what I'm looking at, you take a look at two red horizontal lines if you're watching this on Tiger TV. The first one at the bottom occurs here at the high of the September 6th date. That level, 7172.32. Now, if you take a look at that very next trading session, which is on September the 7th, so the following day, what the DAX actually did was it gapped up. And it created just a little bit of what we'll call a little open window out there. And that is an area where it's void of price. But that little gap creates an area, in this case here, of support. Now, when the DAX came down and tested that level, tested on October 24th, got below there, but closed up above it. That acts as support. It was tested. Actually did the same thing on the 23rd when you had that wide-ranging bar, that red candle, the essence of price out there coming down and testing that area. That also held. Was not tested on the 25th of October, but it was tested on Friday on the 26th. You can see price move down there, close back above it. That area is a very strong area of support out there. Today, this morning, it looks like it has also been tested. Tested close enough for me because certainly the bottom of the candle of September 7th out there. So the area has been tested here. We're going to see what happens with regard to the full moon. It's been tested, can't bust it down. If it can't bust it down, what's it do? It tries to go ahead and move to the top of the consolidation range. And that's really what you're looking at when you take a look at the two red horizontal lines. What you're looking at is a sideways consolidation out there. Now, one could argue that this deep red candle here that occurred on the 23rd, that may be more revealing than anything else, just simply because of the large size of that candle. You don't really see anything to the upside. But I say now maybe you're reading too much into it. You can't bust it down. It says that it should go up towards the top here. The top area here has been tested a few times. That would take you up somewhere in the range of 73.89 to 74.47, and that's why what we'll do if tomorrow, what we'll do on Wednesday, what we'll do is watch the DAX as one of our signals. Now, the commercial as we came into the break was for the Great Panther Silver Giveaway, which we had intended on starting today, and that's where we give away silver every hour on the hour. We're going to go ahead and wait until the U.S. markets open back up. If that's tomorrow, so be it. If it's Wednesday, if it's Thursday, whenever the U.S. markets open back up, we will go ahead and begin that program. So it's not too late to go over to the homepage at tfnn.com and sign up for the Great Panther Silver Giveaway. Takes you all but about 60 seconds. So if you haven't had a chance to do it or you're just listening in, you don't have to be present to win. Just simply go and sign up for it for your opportunity to win some silver out there. So the DAX here being one of the charts that we'll take a look at. What we can also see as we take a look at the DAX out here, if I just simply take a look at retracements. And a retracement, folks, is nothing more than going from the low of a swing point. That's where you see a major shift in the marketplace here in the DAX. The low of that would be the June 5th time frame. I apologize, June 5th. That low is at 59.14. If we go from the low all the way to the high that was established out here on September the 21st, the DAX hasn't even come anywhere close to the, whoops, that didn't work very well. Didn't even come anywhere close to the 0.382 retracement of that set of swing points. Okay, that's now working real well. I'm going to the third time is a charm out here, folks. So just really trying to change. Let's try this one more time. There we go. Try to get to the black line. So now it's those black horizontal lines there. Now, the way that the markets move is and just simply the way that life operates. You're either contracting or you're expanding. It works that same way in the marketplace here. And if we take a look at the contraction here, if we take a look at as it was pulling back, the 0.382 level will be right around 68.90. We'll just call it 68.90 here because I can't really, it looks like maybe 68.91. That would be a normal level. And when a market can't pull back, it actually says underlying is it's got a bunch of strength in there. So, the DAX, if we go take a look at our U.S. markets, we're going to see that they've pulled back, some of them below the 0.382. In fact, the NASDAQ has pulled back to the 0.618 area. And the NASDAQ has been what has been the strongest. The NASDAQ is full of Apple, and it's a weighted index. So when I say it's full of Apple, it's got more of a weighting structure inside Apple and Google and stocks like that. And so, therefore, it has been the strongest. That's what led us on the way up, with Apple and Google pulling back and some other stocks. That is what has led us down here. So what used to be strength now is actually somewhat weakness out in the marketplace. And oftentimes you'll see that shift in the marketplace. So we'll pay attention to the DAX. Let's go take a look at the currency market, because everything is ruled by the currencies. The currencies are trading. If you're at home today, trading currency or going into an intraday chart pattern would be something to consider doing. But let's go take a look at the, I got to grab the currency charts out here. Let's go take a look at the Euro 30-minute chart. So we just took a look at the DAX, and we saw a sideways consolidation range. If we take a look at the Euro, really it is doing the same thing. Now, do a couple things. Number one, let's go from the swing point low, which is going to be down on July 24th out at 1.20411, all the way up to the swing point high, which occurred on September 17th. Let me see if I get it right this time. Okay, there's the black horizontal lines, which I'm going to erase in a moment. But you can see that the euro has not even pulled back to the 0.382 level. Not pulling back to the 0.382 level of that expansion, I mean, that is normal. That should be so easy for it to do, and it hasn't pulled back there. That says to me, something to think about. What it really says is the euro is not as weak right now as it perhaps in our minds maybe should be, with everything going on in Europe. What does that say? Well, let's go ahead and remove those areas. Now let's take a look at the horizontal sideways consolidation trading range that this has been traveling in, and you can see that's offset by somewhere right around the let's call it the level of about 1.31286. It's not the entire high of the candle session on the 17th, but you can see that that area, that black line, horizontal line going across the screen, that is the highs of the consolidation range. I would say the black line on the bottom of the screen, that is the lows. So what does this say to you? This says to me that the euro wants to actually pull back a little bit. Maybe and whether it does it today, does it tonight, does it in the morning, looks to me like that's where it wants to pull back to. If it pulls back there and it can't bust it down, what will it do? It will move back up to the top, and it will test the top side. What does that say? That says that then price in the marketplaces would move higher. Even if our markets are closed, they're certainly not closed over in Asia and Europe and so forth. So that's what the euro, and that's another place where we'll look for a signal inside the marketplace as to what is really going on out there as far as what the next move in our markets might be. If we go take a look at, let's take a look at the metals out here. Gold right now, 17.13. That was up a buck. You had silver down 9 pennies out at 31.90. Light sweet crude off 40 cents. If we take a look at gold here, see what we have going on. You can see here these two little doji candles. Really just means, quite frankly, that the market is in balance. Hasn't given us any indication of what it wants to do, with the exception of we can see that the bodies here of these candles, the essence of price, we can see the bodies continue to get smaller and smaller. It says that really the thrust to the downside here is losing some of its energy. Now, it should do that because it reached an area where it was oversold. It did that coming into the session on October 24th as it got down to a low of 1698. So moving sideways and having these doji candles, one might say, okay, it's lost its strength out here. But when you put it in context with the fact that you had gold oversold, one of the most bearish things that it could do, folks, meaning that it would have another leg down, would actually be to move sideways. Because when it's moving sideways, one interpretation could be that it is losing its strength to the downside. But when you get to an oversold condition, what a market needs to do is it needs to recharge its batteries. And by recharging its batteries and not moving higher here, because there's really two ways to work off an oversold condition. You can either move sideways, or you can go ahead and you can move up. In this case here, it's not moving up. It hasn't even gotten above the high of the October 24th there, I believe. That's 17.15. Yeah, it has not even broken out of the swing point candle, 17.15.20 from October 24th. And that trading range on that day is narrow, folks. We're talking a low of 1698.70 to 17.15, $17 as the trading range. That's absolutely nothing out there. So for me, as I take a look at this actually is more bearish, meaning only that gold has more of an opportunity to go to the downside than it does to the upside here, as it just simply moves and it works off that oversold there. If we go take a look at silver, see if silver is doing the same thing out here. Silver actually, as you take a look at the candles, looks a little bit more bearish than gold does. Now, again, what I'm talking here, when I'm using that term bearish, I'm really looking at a shorter term area. Let me see if I can get rid of a couple of lines here on this screen, maybe make it a little bit easier for us to take a look at. In fact, let's get rid of this one as well. Well, we can say, before I do that, let's go ahead, let me make these dark lines out here. So if we take a look at coming off of the low on silver, which was June 28th, all the way up to the high that was put in on October the 1st out there, what you can see is silver is backed off to that 0.382 level. So see how silver has done it? You know, and that was a nice move off of the lows. We're talking about going from a price point of $26 all the way up to a high of $35. So that's a pretty nice move. And when you take a look at percentage-wise, what it is doing out there. So you can see how that's backed off to the 0.382 level. Normal move. The DAX didn't back off. The euro hasn't backed off. That's got to make you stop, or it should make you stop and say, something to absolutely think about, and just to try to gauge and understand the weakness or the strength in each marketplace here. So now that it's moved to the 0.382 level, a normal area, what we can also see here, as silver got down into an oversold condition, it too just happens to be moving sideways. That is not the bullish signal that you want to see when you bounce back to a 0.382 level. Oftentimes, especially when you have an expansion of price like we saw here in silver, like we've seen in the DAX out here, and you get down to that 0.382 level, when you've had expansion, if you just simply come from these lows to the highs, who was in charge there? Absolutely the bulls. There weren't a whole lot of bears to be found. There were hardly any retracements as silver came off of the August 20th level. So, where are the bears now? There are not a whole lot of bears really present. I mean, that was nothing more than just a normal move down. The question is, though, where are the bulls? And the bulls coming down here have not stepped in, because it would be normal after you make this 0.382 movement to at least make a 0.618 move to the upside. I mean, certainly if there was enough energy in the silver marketplace to go from these lows to these highs, and this was a normal level where you would back off, there certainly would be reason for silver to be pushed back up to the $33 mark, and it has not been able to do that. That should make you say, something to think about. So that is on silver. If we go take a look at natural gas out here, we take a look at natural gas, what you're taking a look at is a rising price channel here. And for whatever reason, markets like to move in channels. And channels are where you find co-located opens and closes. That means it can be either an open or a close, and you want to make sure that you have at least 3 or more touches out there. The bottom of that happens to be April 20th. Out at 1.904. So you can see that you've got natural gas traveling inside that area. Natural gas getting down to the midpoint now. You can see how this kind of works in waves here. Goes from the low up to the high, just like there's going to be big waves in the northeast. In fact, dangerous waves out in the northeast on the beaches out there. I can only hope, and you should pray, folks, that the erosion that takes place on those beaches is nothing like what took place down along the eastern seaboard here in Florida. And if we do take a look at the waves moving in and out, you can see you had a wave that moved right up into that price channel. You had the bulls totally in charge on October 11th. How is it that price was contained inside that price channel? I don't know. I just know that it works. You should use this as one of your tools when you're taking a look at your stocks, commodities, whatever it is that you work on out there. Works on all chart types. What we can see here is price move back into that midpoint. The question is going to be, will natural gas pull all the way back down to the bottom? If you're not in on the natural gas trade here, you would love to see that take place. You would absolutely love to see it take place. Move down to the bottom here. I can't give you the exact price range. It's going to be in the $3 and change level. It's at $3.43 right now. 877-927-6648. Be safe out there if you're in the Northeast. And stay tuned. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks, and just some programming notes here with the markets being closed. The markets may be closed, but at TFNN we're not. We are going to go ahead and replay this hour here in the upcoming hour. Then we'll come back live to Basil Chapman. We'll go up to Newton, Massachusetts. Basil certainly can give us a feel for what's going on up in the Northeast weather-wise. We'll come back to Basil from 11 to 12. From 1 to 2, we'll be with Daryl Martin. From 3 to 4, Ken Shreve and Tom's show. Tom will be with you live from 4 to 6. And again, we do have the Great Panther Silver giveaway. We intended on starting that today. We're going to hold off on starting that program until the U.S. markets open back up, whenever that is. So if you haven't had a chance to go sign up for that, please do so go to the homepage at tfnn.com. You'll see a link there. It takes you just a few moments to sign up for it. Let's go. Last week, one of the things that I shared with you was a candle pattern called the Falling 3 candle pattern. And I don't recall which stocks it is that we looked at it and or the day. You can go through the archives of the shows. Again, my show's on Channel 9, and it's a trading tool. You know, when I take a look at candles, most candle signals are reversal signals. If we take a look at Bed Bath & Beyond, you got a reversal candle signal right up here on June the 20th here. You had a nice bearish engulfing candle. That was when Bed Bath & Beyond had made a high of about $75.08. Actually, the trading session before was at $75.84. You got a bearish engulfing candle. Then on the next trading session, I'm assuming here that we had earnings. I don't know if it was, but it looks like perhaps an earnings report on June the 21st out there. So if you were in this equity prior to earnings being released, and earnings were probably released before the bell or after the bell, and you got a candle signal here, bearish engulfing, that told you to be out, you know, that would have been a reason to maybe at least have taken some of your profits off the table. If you take a look at Bed Bath & Beyond, it had one heck of a nice run up, you know, ran up from the, and whether you were in on that run up or not, you have to pay attention to the run up. This is going from a low back in November 2008 from the $17, $16 price range up to $75 without much of a real correction from the lows to the highs out there. So what this did do is it gave you a candle signal. Now, it went ahead, and what it did was it gapped down, did it with volume, major volume, 17 million shares out here. You can see as the equity tries to make it back, can't even get up to an area that it should have at least tested, which was the low of June 20th. Starts moving down again. You have a little gap down here on September the 18th and a big, larger gap here on the 20th of September. And gapping down with 14 million shares. Now, most candle signals are reversal candle signals. There are those that are continuation patterns. And the Falling 3, which was the one that I showed you last week, well, that really was a candle pattern that was taking a look at the October 15 time frame. We had where it went ahead, moved down in price, and then you had 4 to 5 trading sessions where all the price did was really went ahead, 3 trading sessions, went ahead and traded within the body of this candle. And you want to be taking a look at the candle body, not the wick, not the upper or lower shadow of here. And what you did was, what this equity did, Bed Bath & Beyond, October 15th, the close was 60.32. You got a close of 60.24 on October 19th. That was actually your signal of a continuation pattern in this equity. So the candles always giving you information about what was going on. Continuation pattern, in this case here, meant to the downside. It closed out on Friday at $57.45. Bed Bath & Beyond wants to run a lower. Most likely here, you know, it's right up against a little bit of an area of support, which goes back to December of 2011 in the 56.72. Looks to me where this really wants to trade back into is probably go back here and test this little window from April the 7th. The high there, 55.17. It's at 57.45. Folks, thanks so much for being here. If you're in the Northeast, thanks so much for listening. Be safe out there, and I'll look forward to seeing you very soon. Take care, folks. Have a great day.